think people get distracted thinking Bitcoin is a currency. It's not a currency. If you know anything about tax, you know that when you move a currency around, you can't afford to incur a tax obligation. So if the IRS is going to tax you when you transfer $1 million of Bitcoin, then it makes it utterly impossible to use it as a currency. On the other hand, it makes it ideal to use as digital gold or a store of value. And that's where I think you'll see it. And what you're going to see there is more and more companies will do this. Hundreds more companies than thousands of companies will do this because it's just a logical base layer for a treasury reserve. I think that the right way to think about Bitcoin is, and people get this wrong all the time, Bitcoin's not a stock. Bitcoin is a bank, right? And the price of a BTC is not the stock price of the Bitcoin company. The price of a BTC represents all the money deposited into the bank of Bitcoin divided by 21 million, adjusted for inflation. If I formed a bank, JP Morgan, and I put $100 million in it, and I had 100 million shares, the price would be $1 a share. And if people had to buy in when it got to $1 billion, the price would be $10 a share. As long as I knew that you could never make any more shares, then the share price is just going to represent, in essence, the inflation adjusted book value of the bank. And when you look at it like that, you see that in the near term, you'll have volatility, day to day, week to week. But over the long term, the real question is how much money is going to get deposited in this bank in cyberspace. And the next logical step is for all $10 trillion that's in gold to get deposited, and then for people to start to convert their negative yielding bonds and their indexes. And so as that money flows, the price is just going to go up, and it's going to go up not because it's an estimate of future cash flows. It's going to go up because there's 10x more money in the bank, and therefore the price has to be 10 times higher.